Hello, and welcome to the Market Bull podcast. Please note, topics and stocks discussed in this podcast are not financial or investment advice. Before this episode starts, I just wanted to thank you, the listener, for the continued support you've shown the Market Bull podcast so far. Since we started the show, there's been overwhelmingly positive feedback, and it's just been an incredible journey. We have great plans to further develop the show, so thank you for taking the time to listen to me each week. If I can ask one favour of you, it's to please hit the follow button and review the show on whatever platform you're listening to us on. Today on the show, I spoke with Jack Sedgwick, a non-executive director at Castillo Copper, which shares are dual listed on the Australian and London Stock Exchange under code CCZ. The conversation started by painting the demand picture for copper and how it has changed over the past decade. Jack discussed the impact the electrification future has for the demand of copper, and in turn, the urgency on exploration and mining companies. Jack broke down the Castillo Copper projects and how they are positioned for future growth. Jack gave some incredible insights into copper on this episode, and I hope you enjoy listening to it. So hello and welcome to the Market Bull podcast. I'm your host, Ben Kostrich, and joining me on the show today is Jack Sedgwick, one of the non-executive directors at Castillo Copper. Welcome to the show, Jack.
Thanks for having me on, Ben. Loving what you're doing with the show and the sort of interesting, diverse people you're getting on.
Yeah, well, you originally sent me a message on the good old platform LinkedIn, and now I've got you face to face and you're one of the guests. So it's quickly how that's transcended to where we are now. But give us a bit of background on yourself and how you've been immersed in this industry, and just a little bit about Castillo Copper, because I spoke with Dr. Dennis Jensen on my first couple episodes, and I think a lot has changed since even early January. So take it away.
Sure, thanks. So after completing my engineering and commerce degrees, I spent nearly a decade with mining and energy groups, and that included several years fly in, fly out to the Pilbara. Subsequently, I transitioned to mining operations, and after completing my MBA, I moved into corporate strategy, and that was focused on the energy transition and enabling technologies, as well as my current role on the board of Castillo Copper. And I guess not surprisingly, Castillo Copper is a copper-focused exploration company. We're dual listed on the ASX and the LSE under the ticker CCZ. We've got 4 strategic assets across Australia and Zambia. In northwest Queensland, we've got about 950 square kilometres of tenements, and that's in the Mount Isa copper belt. So there we've got the big one inferred resource, and that's 21.8 thousand tonnes of contained copper, pretty high grade at 1.1%. And those have got intercepts up to 28.4% copper. We've also got another 21 prospective targets, and those targets are surrounded by operating copper mines owned by tier 1 mining companies like Anglo America, Rio Tinto, all of those familiar names. In the northeast of New South Wales, we've got Kangi. That's a 100% owned asset with a JORC-compliant inferred resource of 108,000 tonnes of contained copper, and that's really high grade. That's 3.35%, with up to 14.5% copper in assayed diamond core sections. It's one of the highest grading historical copper mines in Australia. In the west of New South Wales, we've got around 800 square kilometres of ground at our Broken Hill Alliance project. That's split across the east and west zone. Historically, the east zone has been the focus, with an inferred resource of 21.5 thousand tonnes of cobalt and 44.2 thousand tonnes of copper. However, late in 2022, we found clay-hosted rare earth elements. And a bit further from home, in Zambia, we've got 4 assets covering 1,100 square kilometres. That's right in Zambia's copper belt. And these assets are proximal to world-class operations such as Barrick Gold's Lumwana copper project and First Quantum's Sentinel mine. So that's a bit of an overview of our 4 assets and where we're located.
And I mean, painting the picture for copper, because we know as we're transitioning to this electrified future, copper has got to be in the mix. I mean, how would you see the key uses and applications for copper, and where do you see this real urgency for it to be demanded, or, get these mines and exploration sites and everything underway for copper?
Yep, sure. Well, I guess it's probably no surprise to your listeners, but copper is an excellent conductor of heat and electricity, and it's non-corrosive. So that leads to its use in electrical wiring and plumbing. So for context, there's around 90 kilos of copper in your average home. That consists of 40 kilos of electrical wiring, 30 kilos of plumbing, and 20 kilos of miscellaneous items like brass fittings. Brass is an alloy of copper and zinc, and all of your electrical appliances. But I think most importantly, and what's capturing the world's attention, is copper is a critical metal required for the energy transition, with its use in electric vehicles, solar panels, wind turbines. There's 3 to 4 times more copper in an EV than an internal combustion engine vehicle. That's about 84 kilos of copper, and that's due to the different powertrain and electrical systems used in the vehicles. So the electric motors, they've got windings that are made from copper. Their batteries have copper foil used to connect the battery cells together. And they've got a number of auxiliary components that need to be connected with copper. So I think a really good proof point of the impact of this trend is that if you look at EV sales, they're projected to increase from around 8 million a year now to more than 70 million by 2040. And if you do the math on that, that alone represents about 6 million tonnes of copper demand. And then, I guess when you think through the threat of substitutes, there aren't any real substitutes for copper. So conductivity of pure copper is second only to silver, but silver trades at around $400 a pound compared to copper, which is about $4 a pound. So this is not a legitimate threat of substitution. You've got aluminium, but that's not as good a conductor, and it doesn't have as strong a tensile strength. So if you're a tradie trying to pull copper wiring through a house, you don't want it to break.
So then, before jumping into a few more, what would that mean then in regards to why hasn't the commodity gotten as much sort of limelight, do you reckon, or even exposure compared to the market darling of lithium, for example, which has really come back now? But if copper is such an important commodity in this EV and almost everything we use, how come it hasn't necessarily gotten that sort of darling appraisal and almost outlook for it as much?
Yeah, it certainly doesn't dominate the news like lithium. But whenever you talk to people that work in the industry, that work at investment banks, that work in equity capital markets, they'll all tell you that copper is the safest bet. So,
and then, yourself getting involved in copper, what have you noticed that's really been changing within that rapidly emerging industry? And what are you noticing are almost the challenges or opportunities for exploration companies in this sector to thrive?
Yeah, well, I guess what I've noticed, and that's why copper is starting to come right into focus, is that there have been very few major discoveries in the last decade, despite a significant increase in copper exploration spend. So that spend is running at about $2.5 billion a year right now, and that's up from around $700 million a year during the 90s and early 2000s. So a significant increase in exploration spend. And with copper demand expected to exceed the refined copper production, the industry is clearly not discovering enough new high-quality assets to support this anticipated demand. But I guess in contrast to that, you've got this increase in copper price, and so what you're seeing is older producing assets reflect price-related adjustments to reserves and resources. But with all those existing operations, they're going deeper, grades are getting lower, and that's increasing operational costs. Ore grades typically decline over time as companies initially mine those high-grade zones, and that's to recoup capital costs and pay down debt. More recently, we're all aware that everything has been disrupted by COVID. Mining operations are no exception. The last year, inflation has really added to mining costs around the world. And I think closer to home, recent flooding events in northwest Queensland, that's disrupted domestic operations. And several companies in northwest Queensland were significantly impacted and not expected to bring their operations back online until the middle of next year. The collective impact of these trends is supply pressure and increasing prices for copper.
And the lag that we've all felt in regards to the pandemic and shutdowns and lockdowns is not really had its full effect yet. And as we're noticing, the whole concept of just flicking a light switch on and off for mines, for manufacturing facilities, it's not as easy as just turning it on and off and then you can just restart from where you're at. There is a huge process in regards to getting it started up again and back to production. And it's not even, we're still going through all those processes now. And, you talked before about the demand increasing and yet supply is limited. And I mean, if you look around the world, London Metals Exchange, I saw was mentioning their copper supply is at low or is approaching record lows. And I mean, what does this mean for the copper price and demand? And is that going to increase the price of the commodity even more? Or what does that mean for the overall market?
Yeah. Well, look, the world consumes around 25 million tonnes of copper each year. 80% of that is supplied from mines, 20% is recycled. Stockpiles of copper are found at a number of locations around the world. So as you mentioned, you've got the commodity exchanges like the London Metal Exchange, but you've also got the Shanghai Futures Exchange. But outside of those exchanges, you've got copper producers, fabricators, downstream manufacturers. And I think, if you're looking at price action, you've got to look at China. So China makes up about 50% of global demand for copper today. That's up from about 40% 10 years ago. And so looking at the inventory in China is a good way to gauge price movement. I was reading a report recently that showed that these levels have trended lower over the last 3 years. And that's sitting at around 200,000 tonnes at present. So that's more of a gauge of short-term price action. But when you look at this and the global shift to electrification and decarbonisation, I think it suggests that copper prices will remain strong. When we've already seen that over the last couple of years. So copper prices have steadily risen from $2.80 or so a pound back in 2020. For Aussie listeners, that's about 6,200 or so a tonne, to where we are today, which is around $4 a pound or close to $9,000 a tonne. That's about a 150% increase in a couple of years.
And I mean, we keep looking at this EV transition. I mean, that's going to have incredible demand or almost urgency for you guys as exploration companies in copper to almost, find something. And it's not going to be that they are going to give you much sort of leeway in regards to giving you time or whatever. But I mean, what sort of impact is that going to play a role in forcing, or not enforcing, but encouraging exploration companies to really get out there and find it? And I mean, how is that going to evolve? Do you reckon there's going to be more exploration? I mean, it's almost a given, more exploration looking for copper, or is it going to be a matter of that there's going to be these larger companies that are looking to almost just absorb smaller tier companies and take them over because that's the easier way to do it at the moment?
Yeah, well, probably all of the above. But, as I mentioned, you've got annual demand sitting at about 25 million tonnes a year. Bloomberg forecasts this to increase to around 32 million tonnes by 2030 and up to 40 million tonnes by 2040. We know that this increase is largely driven by the global shift towards renewable energy, electrification of both homes, but importantly transport. And this is against the backdrop of broader decarbonisation. I think the forecast suggests that around 2/3 of this 15 million tonne increase will come from the energy transition. So, the copper mining sector really needs to bring new supply to the market over the next 5 to 10 years, or it's very likely that copper will be in a significant supply deficit, which will send prices even higher. And in what I believe is anticipation of a mine supply deficit, you're really seeing higher copper prices, the industry seeing a wave of copper M&A activity. So, you would have seen in the news recently, I'm sure, Ben, that Glencore bid for Teck Resources. That was an all-share offer valuing Teck at around $23 billion. That would form the third largest copper miner, producing about 1.4 million tonnes of the metal each year. Closer to home, BHP acquired Oz Minerals for about $6.5 billion, and Rio Tinto acquired Turquoise Hill Resources for $3.1 billion. And that was predominantly aimed at simplifying the ownership of the Oyu Tolgoi copper project in Mongolia.
So, I mean, yeah, there's a little bit of everything happening. And I mean, that, as I said, paints a beautiful picture about copper and the need for it and what's happening on the sort of surface level of the industry. But I mean, diving into Castillo Copper and how you guys are approaching or going at the moment. I mean, you mentioned at the beginning one of the projects, and there was a few top tier companies you talked about in the Mount Isa region. And you've got Rio Tinto in the area, and they've got, a decent sized mine they're operating. I mean, give us a bit of insight into what that area is like and why you're sort of very fortunate or lucky, or I'm not quite sure what the term would be, to be positioned in such a clearly high-performing area?
Well, look, copper is a major export commodity in Australia. Exports run at about 14 billion each year. I don't see any sign that that'll fall away. Australia hosts around 11% of the world's copper resources. That's second only to Chile, that has about 23%. South Australia, interestingly, holds 67% of Australia's economic demonstrated resources, with Queensland holding 11%. But I believe Queensland actually has the most operating copper mines. So what's the interest in Mount Isa? Well, I think the primary reason is Mount Isa has a really favourable geological setting, prospective for hosting mineral deposits like copper. The region's located within a zone known as the Mount Isa Inlier. That's characterised by a complex history of geological processes and hydrothermal activity that resulted in the formation of really large, high-grade copper deposits over time. It's also host to a range of different styles of copper mineralisation. So you've got strata-bound deposits, and that's where the copper's found within specific layers of a rock. And you've got structurally controlled deposits, which is where the copper is found within the faults and the fractures in the rocks. And I think, for the smaller players, what's also really attractive is the region has well-established existing mining operations, processing facilities, really good transportation networks. And these things together can provide faster access to markets and expedite the development of new projects. And I'd say on top of that, Queensland government is very mining friendly. They offer exploration grants, similar to what we do in our home state of WA.
And I mean, looking more into that project in particular, I mean, what are some of the objectives or timelines, or I mean, what have you noticed that is happening within the company currently operating for that area?
Yeah, so Castillo Copper entered the Australian copper scene several years ago, and that was ahead of the curve. At the time, copper prices sat below $2.50 a pound. As I said before, they're sitting above $4 a pound now. And given the lack of major discoveries in recent years, miners are now actively seeking out large assets in production, near production, or with proven reserves, or in some cases, just trying to get access to really prospective ground. Our company has about 950 square kilometres of highly prospective tenements in northwest Queensland, including that high-grade inferred resource that I mentioned at the Big One deposit. We've also got the JORC-compliant inferred resource at Kangi, which is incredibly high-grade, and collectively both of these resources are ripe for further exploration. So the board and the company are looking at strategic options for expanding those resources.
And when we mentioned the term JORC, I mean, even it was a term that I wasn't 100% familiar with as well. When you mentioned that, Castillo Copper has 2 JORC mineral resources, what does that necessarily mean? And how would you break that down for listeners or even, myself?
Yeah. So not being a geologist, that's not really my sphere of expertise, but I think JORC stands for the Joint Ore Reserves Committee. And it's a set of guidelines that a geologist will refer to when looking at your drill holes and determining whether you've got an indicated, an inferred resource, or taking a resource to a reserve.
Okay, and I mean, surely that's a really sort of big statement to have, and for Castillo Copper to have 2 of these. I mean, what's so unique about these 2 JORC deposits that you have?
So I think what's really unique about them is the fact that they're high grade. So, the big one is about 1.1% grade copper. Kangi is 3.5%. Globally, I think the average, if you looked at all of the copper mines, they'll tell you that it's about 0.7%, and that's forecast to go down to about 0.5%. So I think the crux of it is they're really high grade, which is really attractive.
Okay, and then I mean, going forward for these projects, I mean, within your role, I mean, you're probably not necessarily on the ground and helping but your position in the company is helping drive strategy and cost operations. What are other plans for each parts of the company or the projects? Well, what are the outcomes or goals or timelines going forward?
Okay, so, well, if we look at northwest Queensland, so starting Queensland, we've engaged Entech Mining. That's a multidisciplinary specialist mining consultant to undertake a pit shell study for the Big One deposit. And if the findings are positive, then we'll determine an optimal path to market. and effective use of third-party processes in the region. I'm hopeful this will be completed in the current quarter. There are an additional 21 prospective targets surrounded by tenements owned by those companies I mentioned before. We've got an upcoming site visit to several of these prospects. And once that's completed, the board will rank their exploration potential and present these opportunities to prospective development partners in the Mount Isa region. Going down to New South Wales, we've got Kangi. So the geology team right now are updating and enhancing the confidence in the 2017 resource by including 34 RC drill holes, which account for about 5,000 metres of drilling. They're going to put these into the geological model and hopefully increase the resource size. Notably, Kangi still delivers exploration potential. As the downhole EM surveys completed in FY19, they identified several untested bedrock conductors that are open at depth. And given Kangi is one of the highest grading historical copper mines in Australia, I think this is particularly exciting. Broken Hill, as I mentioned, has historically been a cobalt-focused resource for us. However, we found clay-hosted rare earth elements when drilling for cobalt in late 2022 in the East Zone. And results from the 7 drill holes returned up to nearly 3,500 TREO and up to about 603 parts per million magnetic rare earth ores, which are the really valuable ones. And that came from one diamond drill hole. The MREO is the most valuable magnetic rare earth elements. So those are 4 elements. They're a bit of a mouthful. So you've got neodymium, praseodymium, dysprosium, and terbium. We believe these are really encouraging results. But you'll see a lot of announcements about rare earths, and the metallurgy is absolutely critical to determine if you can actually separate these rare earth elements from the clay. So what we've done is we've engaged ANSTO. That's a specialist in rare earth element processing, and we want to determine if this is an ionic adsorption clay. If it is, then we'll explore our options, which could involve securing a strategic development partner for the asset or retain our copper focus.
Well, that was going to be the next question, because I know rare earths is another whole dimension of commodities needed. And I spoke with Dean Tuck from Dreadnought, and he mentioned that exact same point about the different sorts of rare earths, and that you need to be so careful about which ones are actually important and which ones, we've got influx or huge amounts of supply, but they're not really actually that important. So that poses the question then for me. I mean, you've got such great copper resources, and then you've also got this emerging rare earths. From a board perspective and being involved in it, how are you guys sort of approaching the idea that, you might have these 2 very, very demanded resources, and then you've got to allocate your time, your efforts, and almost, your resources effectively between these emerging opportunities? What goes through your brain in your position there, helping the company decide which ways or what's the best options to explore further?
Yeah, well, we've got a number of options open. So with the rare earth elements, as I said, we've got to be really clear whether this is an ionic adsorption clay before we get too excited. So I think for the listeners, it's really important to highlight that no clay rare earth element deposit exists purely as ionic. These deposits are formed over time when a rare earth element rich hard rock source, something like granite, that's weathered down into 3 distinct phases. The adsorbed ionic phase, that's cheaply and easily separated. Then you move into a secondary mineral phase where the minerals release the rare earths that they break down, which then form that secondary mineralization. These rare earths can be extracted with a modest pH solution. It's more expensive, but it can be done. And finally, the third phase, which is where the mineral containing the rare earths hasn't been broken down. The minerals in this phase are uneconomic to extract at the low grades characteristic of clay deposits. You see much higher grades in hard rock deposits. I know we've spoken before about Peak Rare Earths deposit in Tanzania. That's got a grade of 5%. And I know you had the MD of Dreadnought Resources on last week, so we probably don't need to go too deep into the rare earths. Too much deeper on that. But yeah, we're a copper-focused company. If these results are great, then we'll look to either secure a strategic development partner or assess our drilling options.
I mean, it's a good position to be in to have that. It's almost an extra hand, an extra sort of utility at disposal. Having that potential, just sitting there, just waiting for the results to come back, which does take a fair bit of time. But I mean, focusing back on the copper side of things, I mean, where do you see the industry really accelerating? I mean, talking about, there's big companies out there, as we said. There's car manufacturers that are jumping into mines. I mean, they're piling into lithium. Do you see there's going to be this approach for them potentially jumping into copper mines as well? I mean, M&A activity or mergers and acquisitions, is there going to be more of that? I mean, where do you see the outlook for copper heading? I mean, being a bit of a bull myself, there's so much tailwind behind this industry. I mean, where do you see this future heading?
I mean, there is a lot of M&A activity going on right now. And I think mining companies can see the supply and demand imbalance coming with electrification, decarbonisation. So that demand impulse is compelling on a 5 to 10 year view, with no new supply coming on outside of the next 1 to 2 years. So you really do have this looming supply deficit. That's always been the case with copper, but the deficits we saw in 2015 were driven by supply and grade issues, rather than what I see right now, which is a structural shift in the copper market from that global decarbonisation thematic. But I think what's different in 2023, however, is the balance sheets of these large mining companies is really strong, and they've got cash to deploy on M&A activity. And I think increasingly shareholders, investors, they want exposure to these green metals like copper.
I mean, that was going to be my point, is that I'm seeing so much more activity in a whole host of different commodities, but it sort of puts yourself, especially Castillo, where you're hitting now in a few of your projects, that it is, yeah, I've said it before, the hawks are in the air, they're circling, they're waiting, and it's more about, identifying if, they lowball you and if you're going to knock them back or all these discussions. But I mean, from a shareholder perspective, it's always quite flattering to know that, there's big companies with big checkbooks waiting to sort of pounce and get on there. But I mean, when we're looking at being an investor themselves and trying to get more information or even exposure to copper, I mean, what sort of opportunities do you see within the market for that?
Yeah, look, there's a number of pure play copper stocks with operating mines on the ASX. Look at Sandfire Resources, Austral Resources, 29 Metals. That's to name a few. You've also got the exploration companies or companies not yet in production, but they're progressed along the development curve. Companies like Develop Global, Caravel Minerals, and obviously there's Castillo Copper. I think interestingly, given what we've seen with Chile announcing plans to nationalise their lithium industry, you may see investors seeking to park their money in companies with assets in more stable jurisdictions. I think this is particularly relevant to copper mining because Chile produces around 25% of the global mine copper supply. And, I'm sure you read the news as much as I do, Ben, but the Chilean president said he would nationalise the country's lithium industry. And I think his plan was to do a separate state-owned company to produce the metal. But I think this is for future lithium contracts, and they'd only be issued as public-private partnerships with state control.
When it does highlight the idea of sovereign risk, and we touched on it, I think we had a discussion last week, and then shortly afterwards this hit the market, and the reaction, almost not surprising, was quite negative for some of the companies that are located in those jurisdictions. And you can happily say Australia, no matter what state it is, there's very limited opportunity for state bodies to come in and take ownership of mines and deposits and do exactly that. That sovereign risk has now been highlighted. And you can imagine for investors and even just people looking to get copper from safe and secure jurisdictions, surely Australia now has got that extra bigger tick. And, lithium-wise, we're a huge producer, but there's going to be copper, there's going to be rare earths. We've got so many resources that's going to draw people back to us because of that benefit that we haven't got state bodies getting involved and controlling the supply, which, you can happily say is going to be beneficial for Australia.
Yeah, well, the government's trying to get us into the higher value add activities such as battery manufacturing. There's a bit of a push for green steel. We've certainly got the resources here. I mean, WA is a massive area of land, and I think we've only just scratched the surface. So it'd be interesting to see whether, as a country, we can progress from just digging stuff out of the ground and shipping it off, or whether we can get behind a manufacturing industry.
Yeah, no, big time. I think the increase of everyone, in a way, moving away from China refining a lot of these metals, and even the United States building more refineries and facilities to manufacture all these raw materials. Australia's always just been to dig it up and export it out, but it's almost, we've got to switch our mindset a bit more and start focusing on the full supply chain ability. And I mean, for yourself, if in your position, I mean, what do you love most about being involved in exploration, and in particular your role? I mean, what's driven you to take on this new opportunity, and what are you enjoying so much about it so far?
Well, I love working in a small company. So you're part of every decision. You get your hands dirty. You look at the numbers yourself. You've got finite capital, and you're responsible to the shareholders for delivering value with their money. So, it's a bit more real when it's a small company, and every decision has a really tangible outcome. And I'm a really results-driven person. So that's the attraction of exploration for me.
And I mean, for listeners that want to learn more, because you're very educated, you know a lot about copper, very switched on, I could tell with all the information you've brought today. But for people that want to learn more from yourself, or just get in contact with Castillo Copper, where can they go to get more information?
So you can go to LinkedIn, go to the company website. We've all got LinkedIn profiles. Contact details are on the website. Happy to take any queries.
No, beautiful. I think if listeners have any questions, either contact myself and I can send them to Jack, or reach out to him directly, because I'm sure he's got plenty more information that can be helpful for listeners. And it's such a fascinating insight into copper. So thank you for taking the time to speak with me today. And look forward to having you back in the next sort of 6 months and seeing how it's all progressing and how you're finding the role and what the new opportunities are within the copper and potentially rare earths as well. So thank you.
No, thanks very much for having me, Ben. Appreciate it.
Thanks for listening to the Market Bull podcast. If you enjoyed it, please make sure to like and subscribe. You can follow the Market Bull on our socials at Twitter and LinkedIn by searching the Market Bull. You can also subscribe to our newsletter on the website by visiting www.themarketbull.com.au.